0593, 57.2T. Supply chain diverged. Ignore Samsung's flat close. The real signal is smart money rotating into the upstream alpha, confirming US AI infrastructure demand is still accelerating. The broader Korean market closed down a heavy negative 1.38% today. Let's look at why that aggregate number is a massive trap for the uninformed observer. The KOSPI is heavily weighted by giant finished goods manufacturers, so when it drops, retail panics. But we don't trade the panic.
We're tracking a major decoupling right now. Capital is actively liquidating the finished manufacturer to monopolize the bottleneck upstream alpha node. They know whoever controls the critical components controls the future profits. It's exactly like a modern-day gold rush. Instead of betting on the giants who might or might not strike gold, the smartest money is buying out the single hardware store in town that sells all the pickaxes. That upstream node is where the true, undeniable value lies when downstream demand goes explosive.
That heavy drop is a data point, sure, but it's a trap. Do not let that aggregate macro number deceive you or shake your position. An aggregate index blends the winners and the losers together, completely masking the most vital signals. If you're only looking at the surface-level drop, you're missing the surgical strikes happening underneath. Global capital flow is repositioning, shedding dead weight, and hyper-concentrating on the exact nodes necessary to build the next generation of AI hardware.
This aggregate drop is just surface noise masking the true vector. The smartest money flow is hiding in the supply chain, not bleeding out in the broader index. The heavy red blocks represent the giants taking a macro hit. But those isolated pockets of intense buying, that's targeted accumulation. The broad market is literally being used as a liquidity provider to fund massive strategic entries into the specific strategic tech partners the world absolutely cannot live without.
Execute the Canary Protocol. Foreigners dumped Samsung for negative 175.2 billion Korean won on a record earnings day. Simultaneously, they activated a massive signal by buying plus 159.2 billion won of Semiconductor, the strategic tech partner making the critical equipment Samsung desperately needs. While the giants sleep, this key supply chain node confirms target U.S. asset demand is explosive. The Canary Protocol is simple. When the finished goods manufacturer is sold off despite good news, but their crucial strategic tech partner sees massive accumulation, the true demand is locked in the supply chain constraint. Notice this hidden correlation. With the correlation coefficient, ρ equals 0.82, indicating a strong directional shift, it proves capital is migrating from the finished goods manufacturers to the strategic tech partners, enabling the production bottleneck. We're watching a fundamental reallocation of global tech assets. The giants like Samsung and SK Hynix are locked in a fierce battle to produce the memory chips required for advanced computing, but they can't do it alone. Capital isn't betting on which giant wins the war. It's betting on the weapons manufacturers supplying both sides. The structural sequence is undeniable. Samsung's next-gen memory, HBM4, mass production announcement translates directly into machinery orders, specifically TC bonders. This means recognizing revenue for the leading indicator Hyundai long before Samsung sees the actual margins. To break that down, a TC bonder is the highly specialized, bottleneck machinery required to stack these high-bandwidth memory chips together. Without Hyundai's bonders, Samsung's ambitious timeline completely collapses. The supply chain reality dictates that the strategic tech partner gets paid today for the capacity Samsung hopes to sell tomorrow. Divergence detected. The macro trap is closing as the U.S. 10-year yield hits 4.41% and the Korean 10-year yield follows up to 3.933%. Higher yields make borrowing expensive, creating pure macro friction overlay. Asian flow may collide with this macro wall tonight. This is the global financial gravity we have to navigate. When sovereign bond yields spike like this, money becomes more expensive and risk assets get heavily pressured. It acts as a massive headwind, testing the strength of our supply chain thesis against the brute force of international monetary policy. The supply chain says bull, but the options, FX and bonds, say bear, and that conflict decides the open. We have a pristine, high-conviction setup in the micro-level tech components, clashing violently with a deteriorating macro-level environment. Currency markets are volatile, and the bond market is flashing warning signs. This tension is exactly where the edge exists. The broader market will trade the macro fear, but the strategic player trades the undeniable necessity of the supply chain constraint. This conflict sets our exact tactical parameters. Read Section 1. Activate Tactical HUD. Engage Command Mode. Trade the supply chain. Ignore the obvious headline. Enter SOX conditionally. Target above 27,200. Trust the probabilities. Exit positions immediately.
Abort below 1.5% GDP threshold.
Invalidate setup instantly. Terminate if core PCE hits 0.4%.
Watch pre-market volume. Confirm Hanami accumulation. Enter SOX conditionally.
Confirm the signal. Await core PCE data.
Enter SOX conditionally. Execute upon confirmation.
Invalidate if PCE breaks 0.4%. Maintain hard invalidation rules. Correct the LaRoche vector. Log results at 0730 ADT.
Hold the line. Make no exceptions. Subscribe for the Asian close. Beat the New York Open.
Be here, buy the bottleneck, choose your divergence side.